Alright guys, I'm going to try to do this recording. So I wanted to show you how I used data with technical analysis plus just knowing where we are as a market to set up some trades. You guys know I have a scraper that gets this from Market Chameleon. An example, if you look at line 6 here on PD, see how we have 20%? So what that's telling you is 20% of the time we have a positive occurrence, which means we go up. So that means 80% of the time we go down, right? So what that's saying is PD gaps down 80% of the time. So what I do is I come in and I look and say, okay, let me look at PD and see if this is a good opportunity to short. Well, because zoom the market up, right? We ran 20% in 2 days. I mean, come on. If there was a perfect setup, this is it. We just ran 20%. Look at that, 19.15% is what we ran. And so if there's ever a time to short, it would be now, because we gap down 80% of the time, right? So data, where we are in the market, technical analysis, blah, 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 blah. See how it all matches? It ran right to that point? Okay, just one example. Now, the other thing that I do is look at 5. So I set it up so that it gaps up 92% of the time and drifts 25% of the time. That means it gaps up and then sells off. Profit taking, right? Well, on 5, I had these 2 drawn lines, okay? Why do you think I had these drawn lines? Well, if you know me, you know one of the reasons. But let's see the other reason. This is what I do. I combine them. You come over here and you look at 5 right here. I'll make it the top symbol. So 5, this is the price I put in. So I knew it was going to be around 117. This is the implied move. Gives you a range, 128, okay? So I put in a line at 128, okay? So this line, I move it. All right, bam, we're at 128. Then I look at the absolute average move and the absolute average gap. What do they tell you? It's about 125, right? So 124.65 to 124.88. All right. So there's that line. Now, those are the resistance points according to the data. Let's look on the chart and see if we can find it. All you have to do is look at the volume profile bars on the left side of this chart. I'm going to take this away so all you see are these lines, okay? So let's start scrolling backwards. Well, we see one, right? There's a big green one out of the middle of nowhere. All right, so, okay. Oh, look, see, it's getting even bigger. Okay, so I've already got this line here. So normally, if we're underneath, I would put this here, but because the data is telling me there, so I'm moving it to the top of this one. Right? All right, well, let's see where else. Oh, look, we get another one. We get another cluster right here. You see it? And so I've got these guys and these guys that I'm saying, okay, well, if we get a pop, if they've been trapped for this long, I bet they're going to be getting out, plus the profit takers. I think we can get a good short, okay? So the data, the technical analysis, all of it lines up, plus five hasn't gone absolutely crazy, right? So it could actually sustain a move. Let's look at what happened. So I had these orders in to short, and I was filled, right? Bam, and bam. And within 1, 2, 3, 4, 5, 6, 7 minutes, I covered for $10. And the reason I covered was because, again, I'm just trying to catch these quick moves. I did the same thing on Splunk on earnings. It shot down to like 200, I think, was what the range was. Yeah, it shot down to like 200, and then I just scooped it right up and sold it for $20 like 5 minutes later. So now tomorrow, this is just one play. Now tomorrow, if you wanted to play it, I don't know what Five's going to do. Their earnings were good. We could completely go against this data, but what the data says historically is Five gaps up 92% of the time and fades off. So it's going to close below its open. We've only got 5 sample size. So what I'm going to do tomorrow on Five is I'm going to come in here, and let's say tomorrow we close at, we open at, it's at 125.19. So let's say we open at 125.19, which puts us right on that average gap. You notice that? So we're right on the average. He's doing exactly what it normally does as of now. And what it's saying is, if you're looking for a short, the percent from open to high is 2.4%. Okay? So that gives you 128.19. Now, do you remember what 128.19 was? It's also the implied moves range plus the resistance, right? So again, that's a good short area to bet against. Okay? If you're wrong, cover. Say 130 is your max, whatever. You take your own risk into your own risk profile. But this is how I use it. I hope this video made sense. If you have any questions, just let me know.